Good morning, people who are joining virtually. Are you audible enough?
Yes, sir. Good morning.
Right. So we were discussing about the given group assignment. So my expectation was to get a kind of a summary report, audit planning report for the industry, right? So I have requested to select some companies, sample companies, to get the understanding of the industry, right? Not the analyze that each and individual company and doing a audit plan for particular company. So you better analyze these 5 companies, understand what are the the common things in the industry. So there may be some specific investments or transaction in particular some of the companies. Don't focus about that. So I want a kind of a common audit plan for the industry, right? So then that can be used for a kind of a year for all companies. Can distribute to each and every audit teams. This is the common work programs for this year audits, this year hotel industry audits. So this is the expectation from the audit firm. So then that can be used by the audit team in a customized basis for that particular company. Right? So then audit plan is a common program, but the usage may be you can do kind of a customization to the particular company. So that audit plan should be the output from your task. Keep in mind that, right? Sorry. So we were discussing about audit procedures. We completed fixed current assets. And current assets in the sense IT, PP&E, tangible asset, and then intangible asset, and then we completed receivables, and then again inventory, right? We are with what? Cash and cash equivalent. So I gave kind of activity last week. I think activity got rid of activity. So then activity, I hope you have done it. Happened. Rather than very much.
University दिक्कत के लिए
So what are the unusual items you identified from this bank records? So we are discussing about audit procedures for cash and cash equivalent. We have to discuss about TOC procedures and substandard procedures. Under substandard procedures, one of the key work step is evaluate the bank reconciliation, right? Evaluating bank reconciliation means what you have to do. You have to check the arithmetical accuracy of this, and we need to identify what are the unusual items. We need to verify this balance. So that's the basic requirement. So then once you are going through the bank reconciliation, you can identify, what's the reason we do the bank reconciliation. And you can see year balance and then the bank statement balance. There are differences. We can identify what are the reasons for differences, right? That may be kind of a time gaps or errors. Because of that, these two balances may be different. Once you are going through this, what are the unusual elements you identify? Payment for innovative continue. Payment for innovative interest. 500,000. But they can unusual. Frequency. Duplicate then number given as name. Check number 88, 93, 94, 95, 96.
Payments keep the authority limit. So I mean, if they together do the payment, it will be like 4.5 million. Now in the same day, they have issued 500,000 checks to skip the authority limit.
Yes, that's the exact issue here. So then we have same type of payments, same customer. Let's say vendor, not a customer. Let's say supplier or vendor. So then we have done same payment, 500,000 payments. You can see. So you can see this. We have around 4.5 million payment to one vendor, and in the same day by using different check numbers. So that may be, so they can issue this check 4.5 million one check, right? So they may manipulating the authority limit. They may have authority limit more than 3 million. Payments can't be approved by this person. So what they are doing is they are issuing 500,000 9 payments, 9 checks. So then what's the limitation they may have? What's the limitation? So that's the issue in the design of the control. Control design weakness is there. Why? They have done the control design So then they have mentioned in the procedure manual, CFO can't approve more than 3 million payments. 3 million payments. So then that should be corrected. How? So the CFO can't approve 3.5 million payments in a day for one customer. Right? If it is so, they can't do this. For that procedure, control should be very specifically written. Control. So then they can't play around this control. So this is kind of a critical issue. You should not. So then you can clarify. So they have done this type of payment for one customer in one day. You better issue this kind of one check to him. But you have issued 9 checks to one person one day. That's a one concern. But that's really good. So that's the audit sense, right? When you are doing auditing, you have to pick these kind of issues, right? This may be a kind of a fraudulent mentality. They are superseding the control available in the organization. Right. What else? Another thing. Bank charges. Yes. Here we have bank charges. We have bank charges here. Bank charges is the adjusting item in the cash book. Can't be an item in the reconciliation, right? Do we need to explain more about that? It should be adjusted to the cash book. So then bank has deducted this. We have not recorded. We have to. We're supposed to record this in our cash book. Bank charges expense debit, cash credit. That should be passed. If they have passed this, we don't have this in the bank reconciliation. It's not an element to identify as the total difference, right? Right, what else? 2, done. Salary, yes. There's a salary expense for Mr. Malshan. Normally, salary expense, we are not paying salary by using checks. That's not practice like that. What we are doing is we are paying salary by using kind of a fund transfer, right? We are not issuing checks for salary. Maybe unusual one. You can ask if there is a particular reason relating to this. If Malshan is a kind of a temporary hired employee, that may be fine, right? Malshan is a kind of a director or permanent staff. If you are using a check, it's unusual. That question, I don't think. That's good. That's really good, right? So that may be kind of a fraudulent transfer. What else? So that they just you better try. Long outstanding unrealized deposits. Yes. You can see we have unpresented checks this month, and then not realized check. We are doing the bank reconciliation for March month, but we have January deposit checks, right? This is the big unusual thing, these two. Because it will take, let's say, 2 days to realize the thing. This is unreal. This is kind of a unusual scenario. Great question. And further this, long outstanding, issued not presented checks. Here, we are doing bank reconciliation for 31st March, right? 2020. But we have 2019 September bank rate. Here, October bank payment, right? The bank payment, the issued check, they have not presented. This set of checks also not presented. What it means to you? So they may have not hand over this check to this company. So what they're trying to do is they are trying to understand liabilities. So they are writing some 9 checks. So they are putting that they are debiting to creditor, crediting to cash book. Still they are keeping these 9 checks in their drawers. They are not hand over to the creditor, vendor. That's why this appearing as a issued not presented checks. So then that 9 checks were not transferred to Innotech Engineering. That's a step they have taken. That's very clear now because it's deposited, not realized, issued, not realized more than, let's say, 2 months, more than 5 months. Definitely, a person who are getting 4.5 million, so they are not going to delay to convert to cash, right? If they are getting a check. So then definitely they have not submitted, not transferred that check to this person. That's the issue. So then we can ask, so then to transfer this check to that person. So what's the control you have once you are issuing a check, once you are handing that check to a particular vendor, what's the control you have? Are you getting a signature? Are you having kind of a list, kind of a record, the check transferring with the record? So can we see this? So that current check is not a sign color the thing. A record again at the maker. So then definitely this set of checks maybe they are wrong. So then you can ask that kind of a question. Right, correct. What else? Here. Journal entry. Journal entry කියන එකත් unusual. Concerned journal entry එකනේ. Yes. This one is very unusual. Correct. Journal entry. You don't know what it is. But it's not a reconciling item. There may be a serious issue or kind of a arithmetical inaccuracy. So you need to question on this balance. 58,000, right? As auditor, this should be questioned. Also doubtful. Same date, immediate numbers, same party. Right? So you can question this as well. The last one, Sana. So as the check you have issued for this person, there any reason, right? And these check numbers are a bit unusual, right? check numbers, we have kind of a minimum number, right? I don't know whether they have this, a bit unusual. So then you can question like this. So that if you are getting two checks from one company, right? From one bank, let's say you are getting, here you can see, here there's a one pattern, should check, but deposited, received checks, we don't have a pattern. Is that okay? That's okay. Fine. So we are getting different checks, different banks. So the number pattern may be changed, but there should be a minimum number for a check number, right? So that we have branch number and then bank code, check number. Then we have kind of a format for check number. Here we don't have that. But if you are getting from a one customer in the same way from one bank, if that customer using different banks, that's okay. Different check number from a one bank. Let's say we are getting a check from Coca-Cola beverage from commercial bank in one day. So the check number should be very recent, right? Very recent. That can't be 7637 and 8873. If it is so, that company may issue within a one day. They can finish a one checkbook, right? It's kind of a bit unusual. You can question. So that sense should be there to ask question, right? With the practicality, you have to evaluate that. So that's what it is. Here, it's kind of unusual area, but there may be practical scenarios. So if it is so, you can justify and document it on. So then whatever the independent auditor may question about that. So then as direct auditor, you can say, so that here we also question this. This is justification, we documented that. We went through the real scenario. That should be done as auditor, right? Those are the things. Other thing is, you can see here we have 6297 total, right? Here we have that 6297. Once you are getting this total, that says 6197. This was Get the total. So you can see the number, total number, there's a difference. There's a difference. So what's the issue here? They have kind of a 100,000 difference here. They have value pasted. They have taken this balance to here. This balance equal, right? Balance equal with this balance. But the total difference So if you are getting hard copy of this, if you are not checking this, so then there is a 100,000 difference. So that may be a kind of a large fraud. They may have difference in the trial balance. That trial balance difference can be high here. So then you have to be very alert about this type of things. So once you are, what should you do is you have to take this bank reconciliation first and do the arithmetical accuracy first. That's why we are requesting whatever the schedules you are getting, first ensure arithmetical accuracy, right? Here and there, whatever the equation you have to cross check them, and then you can start your the testing, right? So then you can understand we have bank charges here, unusual check numbers, long outstanding balances, balances issued to one customer. Likewise, you can highlight these issues. So that type of skepticism you should use once you are doing auditing. Right? Auditing bank, cash, and cash equivalent, right? Right. So then some of the countries having this bank reconciliation. Some of the countries, as I said last week, we don't have bank reconciliation. Why? They are doing transaction on time. So then you don't want to check. We calculate bank reconciliation. So that they calculate the reconciliation, but there's no reconciling, right? So then that's the advancement, technological advancement of the country. So they are real time, they are recording transactions. So then what's the process here? You are getting the bank statement. Bank statement is a third party document. And further you are calling confirmation from the bank, right? So the banks may confirm the balance in the bank statement, the bank's balance. It means should also change, right? Cash book balance asset. And then the balance as per cash book asset. Right? Should be also updated. That may be a typing mistake. Balance as per the cash book. It should be changed. Balance as per the bank statement. Right? So the bank statement balance may confirmed by the bank. Right? We are getting direct confirmation for this balance. But the books, the opinion you are issuing to the financial statement. Financial statement containing this balance. So then you have a comfort about this balance, and then you have to ensure this reconciling items. So then after ensuring this reconciling item, you are having to this balance, right? So this balance correct because we got the confirmation from the bank. And this balances, two balances change. Reconciling items are correct. If it is so, this balance is correct. That's the thought process you have to follow once you are ensuring cash and cash equivalent. You are getting confirmation from the bank. We have confirmed about the confirmation, but it's not tallied in the books. So the difference is reconciling item. You have to verify reconciling item. And then you can have kind of a comfort about the balance in the books. So then how you are getting confirmed about these balances? You can do. What you can do is, firstly, you identify the unusual items and get the clearance, and subsequently, what you can check, you can get subsequent bank reconciliation. You can get subsequent bank reconciliations, and you can check that whether they subsequently deposited this. Subsequently, they have presented to the banks and they have taken cash. If it is so, as at that date, it's a reconciling item. So then what we can do is, as auditor, you can check subsequent settlements for the reconciling items. There is no subsequent settlement period. So then here we are preparing 31st March bank reconciliation. 31st March bank reconciliation, there's a check issued not presented. ඒක අනිවාර්යයෙන්ම deposit වෙන්න ඕන April. April May ඇතුළත මේ වෙනකන් ඉන්න ඕනේ නැහැ. So in the month of April, we should receive the bank should receive the check. If you have hand over that to the particular vendor, supply. Otherwise, that will appear as a bank reconciliation like this. These are reconciling items in the month of November, December, Jan. So these are reconciling items. Why? They are not presented to the bank. So then once you are doing subsequent settlements, you can see that. Some things related to bank reconciliations. What else you want to get clarified? So then we have as a bank reconciling item, we have unidentified deposit. Unidentified deposit, what we have to do? Have to record as a liability. Why? It's the asset, right? To the organization. So then we are receiving a unidentified deposit. We are receiving a cash bulk. We don't know who deposited that to our account. So then that should be recorded as asset in our books. Why? Upper account the cash level. So that we have that control to use that. So then the party who are putting that to our account, they don't have the authority to get that back. So they have to take our authority to get that back, right? If it is so, the control with our hand. If it is so, we can identify that as an asset. So that should be recognized as an asset and unidentified deposit account as a current liability, right? So then those can't be appear as a reconciling item. Reconciling item should be one side, issued not presented check, and then deposit not realized check, or whatever the errors, mistakes happen in the banks. Those things should be appeared in the reconciliation. If you are having some other elements, you have to clarify and you have to adjust to the cash flow. So then if there's a narration like the error happened in the cash book, can't be appear as a reconciling item. Why? Error happened in the cash book should be corrected in the cash book. Can't be a reconciling item. So can I agree? That's a reason to create a difference between the cash book and the bank statement, but it can't be a reconciling item. Keep in mind. So then, if you are having this type of a bank reconciliation, you should have kind of a skepticism to go through that and identify issues, right? So we have a past paper. I posted the path application to the group. And please check that. That kind of questions can be tested in the exam. Because joining virtually, you can check the WhatsApp group. So I posted the one example. I'm not going to discuss that. You all can try that. There's no such a difficult part, right? Can you attend to other areas like what are the procedures related to cash balance? And there's a question area. What are the concern areas? And then what are the areas? What are the possibilities to perform cash and cash equivalent balance? And then what's the importance of cash cutoff? So the cash cutoff means it means to you. So then cash cutoff means so we have to ensure the completeness of cash balance. Whatever the relevant cash receipt and cash payment for the particular financial year should be recorded to that year. We are having over cash receipt, so overstatement of cash balance. Over cash payments, the understatement of cash balance. So then cash receipt and payment should be recorded to the correct period. So that's a requirement. So to ensure that, what we can do is we can perform cash cutoff testing. What we can do is we can take the recent cash receipt, recent cash payments to the cutoff date. So we can evaluate that. What we can do is, let's say, we have financial year 31st December 2022, right? So we have to ensure the cash cutoff. So then what we have to do is, the cash may be impacted by cash receipt and payments. What we can do is, we can take last month cash receipt and then the subsequent month cash receipt, right? Once you are having a cash receipt, you are issuing a receipt, right? Receipt in the sense, kind of a source document you are issuing. So to that, you have kind of a sequence order, maybe system generated, right? So then you can generate a list of cash receipt for the period. Period in the sense 2022 December 2022 and January 2023. The list. So once you are having that list, what you can do is you can check. So whatever the last receipt for December should be recorded to the year correctly for December. Whatever the first receipt of the January month should be recorded to 2023 cash book. So that's the testing you can perform. What you can do is you can select last 5 receipts, first 5 receipts, last 5 receipts of December month, first 5 receipts of January month. And you can check whether you have done correctly to the general ledger. So that's about receipt side. Payment side. Payment also you have payment voucher number, right? Payment voucher number and the date and the time. So then all the payments till 31st December midnight 11:59, all the payments should be recorded to 2022. Other payments should be recorded to 2023. So the imagine, if you are dealing with the company who are having 24/7 service, like Pizza Hut, right? 31st December night is a kind of happening night, right? 31st December. They are ordering pizza, right? So the island wise pizza delivery is happening. So then how we can do the cash transfer? We can use cash, credit card, and then the post machine. All the mode can be used. Online transfer, different modes. So then pizza driver. So we are ordering a pizza from nearest outlet. So then they are leaving from the outlet like 11:50 from the outlet. He may reach your home 12.5. 12.5. You are giving cash in hand to delivery board. So then this cash should be recorded to 2023. Why? The delivery boy is a person representing the company. Company received cash on next day. If you are getting cash till 11:59, this cash should be recorded to the books of 2022. That kind of sharpness should be there for cash cutoff. So that's the completeness. That's how we have to ensure the completeness of cash balance. To do this, you should have proper IT system, receipt sequence order, and cash payment sequence order. Based on that sequence order, select last cash receipt of the December month, cash payments of the December month, and pay first cash receipt and payment of January month, and evaluate whether they have recorded into the correct period. Then only you can ensure the cash cutoff. Right? That's about cash cutoff. So that's the, you can mention the importance and you can mention the procedure, the question. Right? That will be very easy. After discussing these type of things, if you are familiar with whatever the discussed steps, audit paper will be very easy. So that whatever the things you are discussing, 100% may be tested in this exam. That's the uniqueness. When you make a mistake, what when you turn the bad? Make a පාඩම් කරන් එන්න ඕන. එහෙම වෙන්න බෑ. වාට අනිවාර්යෙන් positive confirmation, negative confirmation paper එකේ තියෙනවා. Cash confirmation paper එකේ තියෙනවා. Bank reconciliation paper එකේ තියෙනවා. Inventory verification paper එකේ තියෙනවා. So then 100% syllabus may be tested in the exam. So you should know auditing. Otherwise, you can't get to this paper. That's how I am focusing and targeting the paper. Right. Okay. I hope it is clear. Can move to other procedures. So the cash related TOC procedures, payment receipt approval. Right. Basically, I told you once I'm dealing with revenue and receivable for credit sales, revenue and receivable. If you have credit sales, revenue credit, debit to receivable. If you have cash sales, cash debit, credit to revenue, cash debit. So whatever the related cash related sales controls will impact to cash balance. If you are running the company, so your revenue may be consisted of two elements. What are they? Cash basis revenue and the credit basis. Whatever the controls related to cash basis revenue, can consider for the calculation. Calculation in the sense for the cash balance. So then payment and receipt related control. So then you may have approval, right? Approval of sequence order. System approval limits may be there. And then you can check the reconciliation process. So that this is kind of a preventive control. Reconciliation, what is this? The detective control. Once you are doing the reconciliation, all the cash payments is already done. The detective control. So then here we have to check in the bank reconciliation as a substantive procedure. Here we are checking the control. So why we are checking, the control and this bank reconciliation again. Can we check all the bank reconciliation? For a small company can, right? They may have 2-3 current accounts. So then if you are dealing with the bank more than 300 current accounts with each and every bank and all. So we have many current accounts, right? So then can you all recheck arithmetical accuracy and everything in the bank reconciliation as a substantive procedure? It's really difficult. If it is so, what we have to do? Firstly, what we have to ensure the bank reconciliation process. What are the controls they have related to the bank reconciliation? Right. So then we know how you are generating cash book and then how you are getting bank statement. Can we online generate the bank statement, or who is the person doing the bank rec? Who is the person approving that? Where they are going to, archive that, save that in the share folder or whatever the system. Are they having auto bank reconciliation? Likewise, we can question and we can ask questions related to the controls around the bank reconciliation process first, and ensure that, and then you can do substantive procedures easily. You can select a sample and can perform the testing. Otherwise, it's really difficult, right? It's based on the gravity, it's based on the nature of your organization. Your organization is the organization you are supposed to audit, right? So then other controls, cash locker, control keys, plus let's say CCTV related to cash or cash insurance, right? Cash insurance. Cash insurance in the sense, so you may have cash in transit insurance. So whatever the cash you are keeping in the locker, you can have a insurance policy, right? Petty cash management, DL posting approval. Those things can be evaluated. Petty cash is the area the people can do some small frauds. Right? So you can manipulate petty cash. Managers are keeping that petty cash in their personal accounts, right? Some of the companies reimburse the petty cash loan to the bank managers, the personal account. They are sending cash to the personal account. That's not correct. Why? As at the day, so if the cash in the personal account, we can't record that. So then petty cash can be used for some other large cash payments, right? So we have kind of a big procedure for petty cash payments. Who the person can approve? Do we need to use petty cash payment voucher? And what are the relevant expenses we can use for petty cash? So to build some, key or whatever the day-to-day things, and small expenses like purchase, sanitizer, or very small things, right? So then very small repairs can be done. So then in the company there may be starting, small expenses to purchase some lunch packet likewise. So so we should have better, limit. So then you can't do more than 1,500 payments. Likewise, can have controls around petty cash. Right? We have to have separate procedure manual. Right? Petty cash manual. Otherwise, we have to do, issue checks for petty cash. So then that's not practical. So as a company, we may have petty cash. So if you have a branch network, each and every branch may have separate petty cash account. The hotel, we may have different petty cash account. In the finance department, we may have petty cash. In the reception, we may have petty cash. Likewise, so in the whatever the restaurant you have, each and every place we may have a petty cash. So then you should know what is the cash composition of the organization. Composition. So what are the nature of cash we have? And So we may have cash in hand, we may have check in hand, or sometimes we are not using checks. We do fund transfers. We are having a petty cash and the main cash. How many petty cash we have? Likewise, so before you are starting your cash audit, you should know where we are, and what are the cash elements we have. What's the cash process you have listed, right? With that understanding, you can decide what are the control testing you are supposed to do. Right? So then, after getting this answer, control testing, you can have whether rely on control or not rely on control. So then that can be used for your scoping. That can be adjusted to the CRA. That can be added to the scope of the substantive procedure. Then you can start your substantive procedure. So that's the same way, right? After you do TOC, you have to adjust that inside to the combined risk assessment. From the combined risk assessment, you have to get the scoping for the substantive procedure. ඒක තේරෙන්නේ නැත්නම් ඔක ප්‍රශ්නයක්. Can every balance, I am repeating this. Whatever that is. So the TOC, performing TOC means we are focusing on operating effectiveness of the control. We test design and implementation at the stage. Walkthrough stage. Walkthrough stage we evaluated design and implementation. Now we are checking operation. After checking operation, we can have this number of samples. As I said, so that after getting comfort about reconciliation process and the process control and environment, you can select bank with sample. If you have 300 bank reconciliation, you can check 30. If you don't have this control testing, so you may check each and every 300 bank reconciliation. That will be practical. So the sum of the scenario, you are having only 3 bank reconciliations. If it is so, you don't want to check the control. You can directly 100% you can check the reconciliation, right? That's up to you to decide. You can decide kind of a hybrid audit strategy for the balance. Okay. So the direct confirmation, and then checking reconciliation. That is done, right? It's the activity we did. So now I will show that some of the confirmation we can send the confirmation request letters. You have to send confirmation directly to the bank as auditor, right? So then we are sending open confirmation. We are not saying what's the open confirmation? Open, you can say open positive confirmation. So we are requesting whatever the commitments, loans, whatever the number of accounts you have related to this company, please confirm. අපි දැන් එහෙම data bank එකට යවම එවයිද? what we have to do first, we have to get the authority from the company. So the whatever the signatory is given to the bank, they have to sign that and they have to mention this is the auditor. So that they may send a confirmation request letter, please provide particular information. So then only they have to. So then confirmation letter with the approval we can send to the bank, we can get the confirmation. Once you are sending that request, you are sending open. Why? Sometimes if you are asking, so what's the balance for this account, they are only confirming that balance only. If we having some more accounts, they have not disclosed in the general ledger, we can understand through the open confirmation. Open confirmation is a kind of a technique you can use as auditor. I will show that. confirmation and the reply letter. Sometimes banks reply in different method. They have a different reply method. So they just mention the bank confirmation and bank balance and send it. Sometimes after sending our letter, so then they are writing on that letter and sending. Different methods. Sometimes what they are doing is whatever the letter we are sending, copy paste their letter and then they are sending. So likewise, different banks they have different approaches. So as auditor, we have to be flexible to get that answer. Right? Keep in mind that. So I will show whatever the sending confirmation and the responses. So then you can see physically in the sense, see virtually and the physical field work, whatever the things we are doing in the audit. The people who participated for audit works, visualize, you can remember, recall your field work, right? So then I will show you that confirmations, right? So then cash count. Cash count. Whatever the physical cash you have, you can do a count. How are you going to do cash count? You are going to count the cash. Oh, you are observing. You have to observe cash, right? Observe the cash count. So as at the reporting date, in a cash count in a bank may be very difficult, right? Cash killer count කරන්න සමහරවිට. 1 kilo 5 rupee coin කොච්චර තියෙනවද? දැන් රේට් එක බලලා තමයි count කරන්නේ. ඒකට අමාරු count. So then you can observe, you can select a sample of branches and you can do kind of a cash count, right? Physical cash verification. You can observe. Once you are here observing cash count, you have to do the check count as well. Check in hand count. Right? Check in hand verification will be done. So I will say related audit working. You can go through that. So then you can understand what are the procedures. So actually this is not a real, this was based on the real working. So I prepared for the learning purpose, right? So I can't share the actual working papers with you all with the confidential reason. So then I'm sharing with you all the kind of a working based on the real working developed for learning purpose. So then check the group, so you can go through sheet by sheet. First sheet you have standing materiality and work procedures you are supposed to do. So then balance, confirmation. Likewise, go through that.
you see?
Mhm. Gue namanya gue lagi. Makin aku. Cek aja.
Ini cek kalau benar dong. Kenapa?
Ada.
Iya kan? Orang itu bilang berturut mati. Dia mau istilah apa? Kemudian mana?
So this is a type of a example you can see. So this is a actual working paper. You can see what the information log is. Information log is there, and then
Ada yang dia mau kayak ada. Mau jangan ada kayak ada. Ada.
so this is how we are doing a cache working, right? So then for this working, we should add the cutoff testing. So I check that. So here we don't have cutoff testing procedure. So you should add that to the cutoff testing procedure for this working. So then only we can have kind of a complete working paper. Another thing is cash valuation and the foreign currency. If you have foreign currency as at the reporting date, you have to perform the cash valuation testing. What do you call that? So the cash valuation, if you have foreign currency, so you have to use the correct exchange rate to evaluate the correct balance. As an accountant, they have to use the correct exchange rate for valuing cash. You have foreign currency. So what's the rate you have to use? Buying rate or the selling rate? We have cash. In the buying we use the foreign currency selling buying. Because I know the I don't know that. That's any part of selling buying rate. Selling rate buying rate. Why they are having such a selling rate and buying rate? Foreign currency. For cash will it become? Normal cash will it become? So the for LKR to a bank, that the currency rate taken LKR that the value value 5,000 LKR 5,000 bank got done me 5,000 and then 5,000. Then so that you don't have buying and selling for local currency. Foreign currency we have why? What's the reason? I pay. It didn't be that. I didn't buy it, selling it here. Exchange rate fluctuation. Yeah, because of buying and selling, So the exchange rate may be fluctuate. Why do we have such a buying rate and a selling rate? Reason. In the whole world, if we have one currency, so we don't have buying rate and selling rate. But we are using currency for the purpose of exchanging, right? Exchanging things, goods. We have barter system. Now we are using money. Money we are using. Another step, we are using foreign currency as well. Other different countries using different money. It is so. Different countries they are using different money. We are having kind of a transaction in between countries. We can't use the same money, right? Because they are using different money. So then, to do transaction with other countries, if we don't have a common money, so we have to have their money to do the transaction. So that we can get that transaction, we can get that money. So to do that, we have kind of a direct export or import. So we should have direct money to purchase and buying, selling transaction or buying transaction. We should have direct money to do transaction. So then all people in the world, with each and every countries, we don't have money. So can you understand what I'm telling? So that we are dealing with different countries. If you are not dealing with different countries, we don't want the foreign currency. There's no issue. But as a human being, our bonds are very, they expanded. We are using some goods from different countries. Different countries in the sense to we are importing fuel from one country, some other material from some other countries, different countries, but we don't have their currency to purchase these things. Don't have their currency. As an individual, we don't have their currency for each country. So then what we have to do? If we want to buy something from Pakistan, buy something from India, we have to use Pakistan rupee, Indian rupee. So that I have never, supplied things to Pakistan or India. So then I don't have Pakistan rupee, Indian rupee. So then what I have to do? I am exporting to UK. So I am having US dollars. Pretty so I can't be a person exporting for every countries and getting their cash and fulfilling my needs and wants. So then I'm not doing especially for some area. So then I am having US dollars. So then what I have to do? So I have to get foreign currency from some institute. Right? So then banks role coming into the picture. So once we are dealing with foreign currency, commercial banks and central bank, foreign currency dealing, foreign currency buying and selling. They are collecting people who are doing the transaction with Pakistan and collecting this one. So the people who are doing transaction with Pakistan, they may have excess money. So they will collect those things. So then some of the people are doing transaction with UK, they have US dollars, they don't have Pakistan rupee. So then all the things will be collected by commercial banks and distributed proper manner. Other thing is, so we have rare currency and common currency. The rare currency, euro, dollars, right? So then we can do common currency, common transaction, so that we can pay to Pakistan by using dollars. They are ready to accept dollars. they are accepting Pakistan rupee and the dollar. So then if we have dollar, so that's another step. We had barter system, we have local currency, we have foreign currency. Now we have rare currency like dollars. So then all are agreed to get dollars. So then we can do transaction easily with dollars. If you have dollars, you don't want to go to central bank. You may have dollars. Direct dollars you may have. So then you can do transaction with directly transaction with Pakistan by giving dollars. So at that point we don't have buying and selling transaction. If you don't have foreign currency, you have to buy it. If you have excess foreign currency, if you want to convert that to some other currency, you have to sell it. So that we have buying and selling foreign currency transaction. Right? Then how we are identifying that? Buying transaction and selling transaction, buying rate and selling rate to central bank or a commercial bank. Once they are giving currency, once they are buying currency, buying rate, and once they are selling currency, selling rate. From there, we have to get the selling rate. If we have currency, as at the reporting date, we have to convert it. So then, what's the rate we have to use? Selling or buying rate. Why? So that if you want to convert that to rupees, we have to give that to central bank or commercial bank. So for there is a buying rate. If you have a liability, foreign liability, or vendor payment or creditor, you want foreign currency to settle it. So then you don't have foreign currency, you have NKR. What you're going to do? You're going to a commercial bank and ask, I want this much of foreign currency. So then from there, that is a selling foreign currency to me. Selling. If you have a liability, you have to use selling rate. If you have an asset, you have to use buying rate. මොකද අඩු වැඩි මොකක් selling rate එකද buying rate එක buying rate එක අඩුයි selling rate එක වැඩි that's obvious right ඔයා transaction dealing කරනවා නම් ඔයා ගත්ත price එකට වඩා අඩුවෙන් විකුණනවද නැහැ buying rate is lesser than the selling rate so then if you have asset you have to use buying rate lesser rate if you have a liability you have to use the higher rate keep in mind. So then, if you have a small money on foreign currency, so there are not be a significant impact to your financials. If you have big money in foreign currency, this decimal change, buying and selling transaction, the rate change may add a significant impact to your balance sheet. It may be coming with billions or millions, right? Keep in mind. So then you have to done cash valuation correctly. Can check with your central bank rates and commercial bank rates, whatever the rate as at the reporting date. For cash, you have to use buying rate, keep in mind. That's about cash valuation for foreign currency, right? That's right. And cutoff testing, I discussed. Cash valuation, discussed. And then related disclosure requirement. Related disclosure requirement. Disclosure requirement. Case 7, cash and cash equivalent. You can disclose whatever the requirement. And cash, again, is a financial asset. Cash is a financial asset. SLFRS 9 can be used. And case 7 should be used. If you have restricted cash no. So you have cash, but there's a restriction to use it. If it is so, you have to mention that separately. This is restricted cash. Tell me what kind of scenario you have restricted cash. Let's say you are opening, you are planning to get a loan. Parallelly, you have to open an account, right? So then you have to keep minimum 50,000 in that saving account. Minimum 50,000. So that minimum 50,000 is cash, but you can't use it freely. That restricted cash. That should be disclosed separately in the cash flow statement. So you are having cash and cash equivalent. Cash and cash equivalent. Short-term investments like treasury bills, saving accounts. But if you have placed that, and have taken a loan, so you have to mention it. Keep in mind that. So then you have to consider, you have to separate cash and cash equivalent from investment. So that's really important. So the LK 7 says less than 3 months. Less than 3 months investments, you can consider that as cash. Not cash, cash equivalent, right? Cash equivalent. So less than 3 months. So that's the kind of a given benchmark. Less than 3 months. So that should be used very carefully, very important. Why? Let's say you have 3 million FD. 3 million FD. 3 million FD. It's a 2-year FD. 2-year FD. Maturity date is 31st Jan 2023. 31st Jan 2023. 2-year FD 3 million. So my question is this a cash element in 2022 December 31st? December 31st to 31st 2023, just 1 month. Just 1 month after the year end, you can convert this to cash. But in the books of 31st December, have we identified this as cash or not? That is investment. 2-year FD. I'm asking a question. Is that clear first? So we have a 2 million FD. Maturity date is 31st Jan 2023. So my question is, once you are finalizing 31st December financials, is that a cash element or investment? Investment. But within 1 month, you are going to convert it to cash. Maturity period is reason, but this less than 3 months at the investment date. So the maturity period to be evaluated from the investment date, not the remaining maturity. Keep in mind. So let's say, so after December, within 1 month, you are converting that to maturity date is very recent, not 3 months, right? You can't consider that as cash because it's a fixed deposit. So then you can, renew that. But as at the reporting date, fixed deposit. Default is a fixed deposit with a maturity date of 2 years. So then your cash and cash equivalent, 3 months maturity should be evaluated at the issuing date. So the whatever the once you are issuing, once you are investing, so what's the maturity period? So that should be evaluated and considered. What are the cash elements? What are the investment elements? So that's really important. That's again a completeness test. So as auditor, we have to evaluate that. So sometimes companies what they are doing, treasury bond has been classified as cash. Treasury bills has been classified as investment. Less than 3 months treasury bill. 1 month treasury bill, so they classified as investment. So then you have to tell that. So the less than 3 months investment should be classified as cash and cash equivalent. So then that's about completeness. That's not impact to the total assets, but the classification. Right? Basically, these are the things you need to consider for cash and cash equivalent. We discussed about what is cash and cash equivalent, standard requirement, controls, and substantive procedures, and about bank reconciliation, cut-off testing, cash valuation, bank confirmation. So all the things discussed in detail. Right? So the sum of like bank confirmation, I will share with you all some examples. Then you can go through these and you have to be very comfortable with the whatever the step we discussed. And my message is, so these are the very common POC and some primary substantive procedures. If you have a case study, you have to customize these things and suggest procedures, right? I always ask, what are the audit responses? Responses mean audit procedures. Keep in mind. Have to customize. And then we are moving to auditing trade payables and accruals. Trade payables and accruals. So now we have already completed with the asset side. Cash, inventory, receivable, non-current assets, and intangible assets. All asset side done. I hope you have proper understanding about procedures related to asset side. So I am randomly picking one, inventory, receivable, or PP&E, should know what are the procedures. How we are going to audit it. That's the basic requirement. And then we are moving to payable side. We are starting from payables and accruals. So then here we have what's the risk. Overstatement or understatement risk. Understatement risk. Trade and other payables. Yeah. Financial instrument. I hope this not contain statutory paper. Trade and other payables. The financial instrument, financial liability. Financial liability, right? Financial liability. It's the breakup. Trade payables, other payable related parties, like what we have. So basically, what we have to do? The payable balance. We can do TOC. So this TOC may be covered through which steps? Once you are purchasing, once you are having credit purchase, you have creditor balance, right? Purchase related control should be tested. Controls on inventory purchases. So the three-way matching, right? So the control payments handling. So then payable balance may reduce with the payments. Payments related control should be tested. So the purchase related control should be tested. Payments related control should be tested. Credit purchase, increase this balance. Cash payment, increase this balance. Right? So the related control should be tested. To the company to company related control will be equivalent. So the liability recognition related control should be tested, right? From TOC side, once you are moving to substantive procedures, third party balance, right? You can call direct confirmation. Direct confirmation. Checking subsequent settlements. Subsequently, whether you have settled or not, you can check that subsequent. For the receiver also, you check subsequent settlement, right? Receivers. So I told that if you have a travel agent, invoice wise, you have to check the subsequent settlement. So the creditor side also you can check the subsequent settlement. What's the difference? Creditor also checking subsequent settlement, debtor also checking subsequent. But the difference is creditor අපි pay කරන එක check කරන්න. Debtor again company එක check කරන්න, right? Subsequent receipt we have to check for debtors. For creditors, we have to check subsequent payment, right? Keep in mind. Checking samples of invoices. Yes. And check invoices. This is very important. Unrecorded liability test, URL. Unrecorded liability test. This can be tested in the exam. URL, unrecorded liability test. So how we are going to do that? So what are the steps we can follow to do unrecorded liability test? That's very easy. So then we have a financial year 2022. For 2022, we are going to do URL, unrecorded liability testing. What we have to do? We have to do for 2022 subsequent period. We have to get your payments in your organization. Subsequent period is what? 2023. Let's say first 3 months. First 3 months. First 3 months payments. 3 month payment should be taken. But 3 months payments from your bank statement or from your cash book, you can check. So what are the payments in this first 3 months? So then first 3 months payment, you should identify what are the payments related to 2022 year. What are the payments? We have a list of payments, right? List of payments. What are the payments related to 2022? So whatever the relevant payments should be recognized as a liability as at the reporting date. Right. So then whatever the relevant payment for 2022 will be settled in 2023. That should be a liability here. If not, what happened? So then we have to create the liability here. Once we create the liability, what's the accruals and liability will be created? So then you have electricity expense for December. December electricity, the grade 2 knowledge, right? December electricity you have to accrue. Electricity debit, credit to electricity payable, accrual expense. So the ones we are doing in January month, the December electricity bill, cash, credit, debit to the payable account. Debit to the payable account because we created the payable account. Otherwise, that will charge to the 2023 PMA. So then we have to perform unrecorded liability testing. How we are going to perform it? Whatever the year you are auditing, get the subsequent. If you are auditing 2022, 2023 first 3 months payments, right? And observe with the threshold or with the sample basis, so observe what are the critical payments. So based on your materiality, check get the more than 200,000 all the payments in first 3 months and identify the payments related to 2022. Check whether these payments have been booked as a liability at the reporting date. Otherwise, you have to call for booking the liability. That's the unrecorded liability testing. URL. Are you okay? URL එක paper එකේ අර වහන්න කියන්න. කරවා ගන්න නැත්නම් URL එක මේ liability එකට procedure එකක් විදිහට දෙන්නේ. So that may be tested like this. So in the case study there may be some issues related to that, right? So then you are the audit manager. You are supposed to advise to your audit senior how to perform a URL. According to the company scenario, please advise to me. That may be the question. So then what are the steps you have to solve this? So then you are auditing 2022. So then select some period, subsequent audit period, like 2 months or 3 months. That's up to 1 month. So then get the credit balance of the cash book or bank statement. In the bank statement, which side? Debit side. The bank statement, debit side. From the bank statement or general ledger, you have to identify what are the cash related payments and select a critical sample, significant sample, and identify what are the payments related to the relevant audit year and check whether relevant payments have been booked as a liability at the reporting date. If you identify an unrecorded liability, inform to the auditee to book that. So that's about unrecorded liability testing. So that can be done differently in the company situation, company scenario. As I said, inventory observation is a common one. But once you are counting inventory in a hotel, because with the government, URL is common, but the way you are performing is different to the organization. How many accounts you have, how many payments you are doing, number of payments you have, number of accounts you have, it's up to you to decide the mechanism. Again, cut-off testing. Again, cut-off testing. Cut-off testing about the liability. That's also ensuring the completeness of the liability. Disclosure requirement. As per CFRS 9, financial liability disclosure to be displayed. That is about accruals and liabilities. Basically, procedures. Develop only to right? The method. Right. Take interval. For joining virtually, take a short break and come quickly. So we have to complete some parts and that's all. It's a good exercise. Last week we had fun, right? Because it's adding a value to you. You can refresh your mind. My target is completing some more assignments. So then if we have let's say 8 assignments, I can select the high number of marks you have for like 5 assignments, 4 assignments. So then you can earn maximum marks. That's my target. If you can do 8, definitely you can go more than 35 out of 40 for 40% assignment marks. So then more than 30, if you are scoring more than 35 for the final paper, you can get A plus. Or if you are concerned with that much, you can easily get B or A or so that very rarely you are getting fail marks. So then, wow. Assignment wala then natam final exam is natam. Sorry. That's how I am planning because then it should help. You are learning, you are coming for lectures. We hope that you are getting something, you are learning it, and we have outcome. So that's the expectation, right? Okay, have a break and come. People who are joining virtually, you have a short break. Have your breakfast and come again soon. Right. You can different perspective. Otherwise, we don't have much industry. So that's the long first. All right. People ask it like that. Orang bayar kalau ikan kan turun. Jadi untuk ada jadi anak state, dia That's starting another key balance. Procedure for revenue. Revenue is the common balance. The common balance, whatever the organization. That is the complete training organization. Revenue. But the composition may be very different. Maybe vary from organization to organization, right? Some of the companies they are having purchases, sales transaction, service, manufacturing, and construction contract. Different companies are their services. So the revenue nature may be very different, right? So then, what are the standards related to revenue? FRS 15, common standard. The FRS 15. The FRS 15 scope out some of the industries like leasing, insurance. So then different industries scoped out. So then for these industries, we have to use some other standards, right? Separate standards because their revenue nature may be very complex. That's why the 15 doesn't have a capacity to cater these industries because we want some other guidelines, specific guidelines. That's why we scoped out from separate 15. 15 talks about revenue from customer contracts. Once you are dealing with customers, how we are going to recognize revenue. So that's all about SLFRS 15. In the SLFRS 15, we have kind of a model. What's that? 5-step model. So you can search in Google 5-step model, you can see what are the 5 steps. 5 steps are very meaningful, right? Previously, we had revenue standard in case 18, right? 18, no? In case 17 revenue. So according to that, we recognize revenue at the point of transferring risk and rewards. We discuss about risk and rewards are transferring. Now, we have kind of in detail mechanism to recognize that. Not about risk and reward. So the risk and reward, so we consider the risk and reward, but in detail manner. So that's about 5-step model. Firstly, you should identify the balance, right? As auditor, revenue is a key area you have to audit. What's the reason? Revenue is a core focus about the business stakeholders, right? The stakeholders expecting to enhance the profit all the time, enhance the revenue, right? So then all the KPIs depend on the revenue of the organization. Right? So with the revenue we have a fraud risk presumption. Fraud risk presumption. We have a fraud risk presumption. What is that? Fraud risk presumption. We have a presumption. In auditing standard, it clearly says that if it is a profitable entity, profit-making entity, profit-oriented entity, is creating the fraud risk related to revenue. Obviously, there's a fraud risk. We don't want to assess that. Default fraud risk is there. It's a presumption. If auditor wants to rebut this presumption, rebut, right? Or if they want to rebut this presumption, they have to justify and document. Because this is a company, they have very simple revenue process. There's no complexity. Because of that, there's no such a fraud risk. Right? So then, revenue is a very key element in the organization. As auditor, we have to perform extensive audit procedures to address this revenue balance. Keep in mind. Revenue is the area we are having default fraud risk. Right? Default fraud risk. Auditor standard again, make a fraud risk revenue. So then, auditor order now make a fraud risk justify that procedures reason document mandatory, right? As auditor, if you consider there's no such a fraud risk related to revenue, that should be a proper documentation. So what kind of company? Like, let's say you have a real estate company. You have a 10-story building. A building, right? A building. You have a rent agreement. You have a rent agreement. Monthly, you are getting a revenue, a rent income. One rent agreement, you are getting a rent income. For 1 year, you have 12 rent income, right? According to the agreement. Is that a complex revenue? No. Very simple revenue, right? Why? It's very straightforward. You can cross-check with the agreement. 12 rent income, rent. Kind of a 12 rents, right? Then you can justify that this company having very straightforward revenue process. They have 12 rent income, and we don't want to consider a fraud risk related to this. Very straightforward. They can't do a fraud by using that. The people can do fraud if it is complex. So they can manipulate. If you have a complex revenue transaction, only they can do frauds. Let's say in a power generating company. Power generating companies we are normally using less risk related revenue. Why? power generating companies. What they are doing, they are generating power, and monthly they are giving this power to national grid. They have a meter, right? Meter given by the national CEB. So then they calculate this given power, and monthly they are sending a revenue invoice. So then, as auditor, we have to check 12 invoices per year. 12 invoices from CEB, third party. So then they can't manipulate this. If it is so, it's a very straightforward revenue, very less complex revenue. So then we have to justify that there's no fraud risk. Otherwise, as auditor, we have a fraud risk presumption related to revenue balance. Keep in mind. Fraud risk presumption. Before we are starting the audit, there's an assumption that there's an expectation that revenue related to a fraud risk, because always company is driving to have more revenue. All the KPIs depend on the revenue. So then most of the companies, they are paying bonuses based on what? Revenue targets. So then if you have a case study, have a case study එකම තියෙන මේෂ එකක් තමයි. Past papers 10ක ගත්තොත් 12කම තියෙනවා. Bonus link වෙන්නේ revenue targets, revenue KPIs. If it is so, it's driving to a fraud risk. Why? There's a pressure to do a fraud. We have to have three things. What are the three things? There should be a pressure, opportunity, and rationalization. This is, we can call fraud triangle. Pressure, opportunity, and rationalization. So then there's a pressure to have KPIs. With this pressure, it's creating a fraud risk to the organization. Keep in mind, once you are going through a case study, if it says bonuses are linked with the KPI related to the revenue, means creating a fraud risk. Obviously, there's a fraud risk. You can't justify that. The performance based on the revenue. You can't justify that. There's no fraud risk. You can't justify. So then imagine you are giving building to rent purpose. So are there bonuses are linked with the performance? No. Yeah, that. Building එකක් rent එකකට දෙන business එකක් නම් performance based on the revenue එක. Obviously predetermined revenue. 12 months rent. There's no KPI related to revenue. It is so there's no fraud risk. We can't, change our revenue. Then national grid එකට මේ මොනවද electricity supply කරනවා. So it depends on the wind power and hydro power we have. The rainy season we have high voltage. Can we control that? So the manager KPI එකක් දෙන්න පුළුවන්ද කිව්වොත් it depends on the weather condition and the natural things, right? So then there's no such a KPI related to the revenue. If it is so, there's no fraud risk. There's no pressure from the CEO or the employees in the organization, executive board of the organization, the employees basically, right? So then you have to evaluate whether is there any fraud risk related to revenue. Right? So then evaluate the 5-step model. And so then evaluate whether is there a process to identify 5-step in the organization. To understand the contract, read the contract, and understand transaction price. So then understand the service contract, performance obligation, and identification of the transaction price throughout the performance obligation. So for those things, there should be a process in the organization. You have to evaluate that. You have to understand the revenue process first, and then go through the controls relating to that. So what are the controls related to the revenue? So that are we issuing revenue, revenue approvals or sales transactions, sales invoices, returns. So then you have to go through the revenue process. So I can't tell you these are the controls you have to test. Why? Each and every company having different revenue process. Okay. Doctor කෙනෙක්ගේ private channeling එකට ගියොත් එතන different revenue එක, different service එක. If you are staying in a private hospital, different services. So what are the services they are giving? They are giving kind of medicine, right? Pharmacy services there, accommodation service there. They are giving a place to stay, and then operational related things are there, laboratory related things are there, and consultancy. So then supervision type things are there. So there's different set of services are there in a private hospital. So then you have to evaluate such commitments, transaction price. That not that much easy. Right? You have to evaluate the contract between the customer and the company. So let's say you are purchasing electric item for the value of let's say 50,000 electric item. You have 1 year guarantee. 1 year guarantee. If you want to get another 2-year guarantee, let's say altogether 3 years, you have to pay 75,000. What's your choice? Are you going to pay 70,000 or 50,000? If you are paying 75,000, you are getting another 2-year guarantee. අනිවාර්යෙන් ගන්න 75,000 දෙන එක. අනිවාර්යෙන් forever ජීවත් වෙන්න හිතන ඉන්න කෙනෙක්. අපි එහෙම හිතන්නේ. හැමදාම ජීවත් වෙනවා. උදේ guarantee එකත් එක තමයි ගන්න. Then you are paying 75,000. You are paying 75,000 today for 2-year guarantee plus cycle. So then as a company, what's the double entry? Cash debit 75,000. Credit to revenue 75,000. Or another entry. Credit 75,000 revenue or equal transaction, right? You are selling a electric item 75,000. The selling price with 3-year warranty now. So what's the double cash debit credit? Yes. Can you do that? That's the matter. So we have to evaluate the performance obligation. Performance obligation. Why? So here we have 2 separate performance obligation. First one is what? First one is 50,000 plus, equal 50,000, we have item plus 1 year warranty. Another 25,000, we are giving 2-year service warranty. For this 50,000 and this 25,000, at once we are getting cash 75,000. But we can't recognize 75,000 as a revenue. Why? Our performance obligation is spread for another 3 years. Another 3 years. Performance obligation is spread to another 3 years, right? If we are recognizing 75,000 for this year, we are getting a service or kind of a repair or something like that in next 3 years. So we have to incur cost. Once we are incurring cost at this period, we don't have a revenue. Performance obligation is spread for different years. We have to recognize this separate performance obligation and recognize revenue. So then what we have to do? We have to recognize 75,000 for first year. Sorry, 50,000 for first year, and we have to defer another 25,000 for next 2 years. We have to defer. After 1 year complete, we are recognizing 12,500. After completing another 12 months, we are recognizing remaining 12,500. So what's the double entry first? Cash debit 75,000. Right? Revenue credit 50,000. Deferred revenue credit 25,000. This is the entry. This is first year. Second year, we are passing entry. Revenue credit 12,500. Year debit 12,500. We recognize a part for next year. Second year. For third year, end of third year, we recognize the remaining part. With the performance obligation, we have to recognize the transaction price. Right? With the fulfillment of the performance obligation. Otherwise, you can't match the cost versus revenue. So there should be a process in the organization to identify this. Keep in mind. So then, revenue cutoff is really important. Whether we have earned it or not. As I said, for cash, the visa delivered on midnight of 31st night before 12. Whatever the visa you delivered, it's a revenue to particular period. If you are delivering in early morning, 1st of January, will transfer the next year. The revenue cutoff is really important. So whatever the relevant revenue for that particular year should be recorded. We can't, the overstate or understate revenue. So the people are doing this. People are doing window dressing, right? At the 11th hour of the year, they want to, perform, show high performance. What we are going to do? We are creating some bogus invoices and credit to sales, debit to receivable. Receivable also bogus, revenue also bogus. And then we are making a provision, data provisioning. After 60 days, we don't have cash, we are making provision. So that provision may be happening some later dates, but we recognize the revenue for previous year. So those things happening, right? So then as auditor, we have to be alert on this kind of a situation. Because always there's a fraud risk relating to revenue. Revenue को पता study करना. A company-wise example done. Service rendering, manufacturing, buying and selling. Different companies. Let's say construction company. There's a percentage of completion. Different. So then we always motivate courage to do TOC for revenue. Otherwise, very difficult because revenue transactions number of transactions are many during the period. You can't do substantive procedures fully. So you have to do TOC first and come up with substantive procedures. That's the guidance we have given, right? That's the guidance. So then my request is do some study about 5-step model and have kind of good picture, wide picture about revenue, different revenue streams. then try to decide audit procedures. Very difficult, right? So the case study to case study, the company is different. So the revenue sources is different. Intercompany revenues are there. Related party revenue are there. Then you have to be very alert about revenue transaction as well. Right? So then I will discuss this in next week as well, because continuously we have to, so that we discuss one thing in 2 different days, so that will go to your permanent memory, right? That's why. So I have given kind of a brief understanding about revenue now. So then I will discuss in detail about test of control procedures and substantive procedures, right? So then now I'll post a assignment. So that consists with 20 questions here. Very easy. So don't want to give no detailed answers. Right, I shared the plan of your candidate. Thank you. So you have more than 1 day to complete it and upload. So the people who are joining virtually, take that message to the people who are absent today. Then they can do and upload within 1 day. More than 1 day I have given. Do it and upload to the LMS. Right? So so I am motivating you all so you can discuss and give the answer. Talk to your friends, Google it. So කොහොම හරි ඉගෙන ගන්න ඕනේ. ඒ කියන්නේ මේක හදලා තියෙන අද වෙනකන් කතා කරපු වලින් තමයි හදලා තියෙන්නේ. හැබැයි කතා කරනවා කියලා යාළුවත් එක්ක උත්තරය අහගෙන නිකන් දානවා නම් that's no point. So you will start in the exam. So then උත්තරය යාළුවගෙන් අහගන්නවා නම් what the reason, what is this මචං කියලා හරි අහන්න. So what's the relationship between this and that? Why you are telling that thing? So what's the exact answer? Likewise, do kind of activity and upload it. So then it will improve yourself. That's the main purpose, right? Google it, go through the slide deck. Slide deck today, all the answers. So if you have doubts or difficulties, you can ask. උත්තරේ කියන්න පුළුවන්. උත්තරේ කියන්න නැහැ. I can explain it, right? Main purpose is you have to update on whatever the thing is done. So this is assignment number 3. So to make sure you have to write it and scan it and upload, right? Don't do it Word document, right? Because you have to write manually in your exam. Otherwise, you can search in Google, copy paste and upload. No point. Manually, scan and upload. That's the purpose. So rather than not the issue is exam. I can't handle my pen, right? And already we are working with the computers, right? Here practice audit paper, so we have to practice in writing, right? Manual writing. That's really difficult because 24/7 we deal with the computer and the mobile phone. So that doing manual writing is really difficult. So do practice that. Audit paper is essential, right?
only these anything
Today I will upload all the past papers, right? The past papers and plus one suggested solution for one past paper. And then you can now attempt the past papers, right? My advice is try to do past paper manually, right? Kind of writing paper, you have to have a habit of writing. That's a matter. And past paper balala skip karla tari danna කියන එක යන්න එපා. Manually you have to do some question to attempt for this paper, right? People who are joining virtually, then you have to be alert on that. That's my requirement.